Hey, ladies and gentlemen, this is Chris Sost, and I just wanted to take this opportunity to thank you so much for tuning into today's episode.
Hey, everybody. Thanks for tuning in to another episode of the Gig Economy Lounge. This episode is going to be about the latest earnings call, the first earnings call for Uber as a publicly traded company. And it was about as good as it can get for a company that's continuing to lose about $1 billion per quarter. Now, a lot of people find that to be astonishing, which in a way it really is. But now that they're a publicly traded company, it's about meeting and exceeding expectations in a positive way. So I think what Dara and Uber did really well going into the IPO was conditioning the analysts and the investors on what to expect going into Uber becoming a public company, setting expectations correctly for the next 36 months. So that way, when this first earnings call came about, it wasn't going to be a huge deal that they were losing money. So congrats, for Uber for doing that, because Uber reported a net loss of $1.01 billion for the quarter, which is in line with what analysts were expecting. The company reported total revenue of $3.1 billion at the top end of its preliminary estimates for the quarter. So during this reported earnings, it was the first time since a public company debut earlier this month, reporting revenue at the top end of its preliminary estimates and roughly matching analyst estimates for its net losses. The biggest thing to take away from this is their net loss, which was $1.01 billion versus $1.01 billion, which was expected. Now, their revenue was $3.1 billion versus the $3.04 billion estimated revenue that was being expected. So they came in higher. Now, a couple of things to just go through. It marks a 20% increase from the same period last year when Uber reported $2.58 billion in revenue. So Uber's growing still. Their revenue is growing 20%, which is, it's incredible, the amount that they've grown, and they've continued to grow over time. Uber reported gross bookings for the quarter of $14.65 billion. That's up 34% from the same period last year in 2018. Gross bookings measures the total dollar value paid for its services, including taxes, tolls, and fees, but not tips. Uber grew its monthly active platform consumers 33% from last year. And this quarter, they had 93 million active platform consumers. That does not count drivers. So you can comfortably say Uber is knocking on the 100 million user mark, which once again, it's phenomenal. For the second quarter in a row, Uber reported a negative core platform contribution margin, defined as the amount of profit it makes from its core platform business divided by adjusted net revenue. This quarter, it fell to negative 4.5% compared to 17.9% during the same time period. Note that this was literally the only thing that came in as a negative. But once again, it was expected. Why? Because the company did a great job in painting the picture of what was to come. So many people don't get this, that companies, when you go to the public market, you can't paint this unrealistic picture. I mean, by all means, you can turn around and you can say you're going to be the next Amazon, and you can tout your growth, but you have to be the one that highlights where your shortcomings, and you also have to highlight your challenges, so that way it's not a surprise in the future. Now, just moving on, I want to get into the meat of it. On the call with analysts, Uber CEO Dara said he likes what we see on the competitor front in the U.S., referencing Lyft's earnings call, where executives said that they are beginning to compete more on brand, which basically means Lyft is not trying to overtake Uber anymore in terms of market share. They're just trying to build their brand as something solid. And I almost would say that Lyft is looking at becoming a nice, comfortable number two, which is unfortunate, but it's the reality in terms of the market forces. So when drivers talk about, Trip or any of these other companies that are coming up, It's great if you just look at it from a driver's perspective. It's great. But the reality in today's marketplace, if you're just a rideshare company, you're going to be nothing more than number 3, 4, 5, and 6. You have literally no chance of overtaking Uber simply because of the war chest that they have in terms of capital. And they have the ability to raise more. So you know what? They're sitting on $13.6 billion right now. Incredible. Which means they have a hell of a financial runway, even if they're losing, even if they're still at their burn rate of $1 billion per quarter. But just to keep going into the positive news, in the first quarter of 2019, Uber Eats saw substantial growth in adjusted net revenue and gross bookings compared to the same quarter last year. Adjusted net revenue for the segment, which measures revenue after payments to drivers and restaurants, grew 31% to $239 million. Gross bookings increased 108% from this time last year to $3.07 billion. Dara said on the call that Uber Eats has the potential to grow significantly and said that if the segment were to eventually overtake ride sharing, that would be an enormous win for us. Let that sink in for a second. Uber Eats is growing at such a rate that it can actually overtake Uber's original core business model, which is ride sharing. And I've been preaching this for a long time. Everybody shits on Uber, and everybody ride share this and ride share that. If you're still in 2019, if you're looking at Uber as a ride share company, you don't fucking get the bigger picture. You just don't get it. I don't know if you ever will. They are so far beyond just rideshare. You know, I feel bad for people that live in 2015, 2016, 2017. Guys, it's fucking 2019. They are a technological mobility company and logistics. That's what they're becoming. They've shed their ride-sharing skin. That's coming off. That's becoming a smaller and smaller portion of their portfolio. And I've been preaching this for well over a year and a half to 2 years that rideshare was going to continue to become a smaller and smaller percentage of Uber's core business. And the reason is because there's a lot of competition. But what Uber's done really well, exceptionally well, better than any other company out there right now in the sphere, in the industry, is they have built brand utility. They are building brand power to the likes of Google, Amazon, and Facebook in terms of brand power. And why I bring up, companies like Vibe and Trip, why they're going to have an issue is why would a consumer download 5 different apps to have 5 different services from 5 different companies when they can download 2 apps from Uber and satisfy everything? Food delivery, rides, carpooling, bikes, scooters, public transit ticketing, you name it. This is the bigger picture. This is where Uber is going, guys. It's where it's going. I'm not even talking about driverless cars yet, because honestly, that's just icing on the cake. That just takes care of the payment issue, from a perspective of the company in terms of what it has to pay its drivers right now. They're focusing on huge growth markets. Uber Eats, they're growing mobility, alternative mobility options, bikes, scooters. Lyft is also doing this, and they should. But there's a lot of companies that are out there. But once again, if I'm a consumer, why am I going to download Uber and Lyft for rideshare and then also download, Bird, Lime, or, any other, e-scooter company, and then download Grubhub and DoorDash and then download it does why? From a consumer standpoint, why? I can use the biggest brand, which is Uber, that maximizes utility. So I can, in one app, I can request a ride in a car. I can request to share a ride in a car. I can request to rent a bike. And then I can also request to rent a scooter. That's 4 different things, basically 3 different things in one app. Why the hell am I going to take up more room on my phone with more apps from more companies and have to worry about more? Guys, this is real. What they're doing is real. So looking back in review, Uber's first quarterly earnings call was as to be expected. They lost $1 billion. They're still seeing overall growth, and they're seeing tremendous growth on a global scale with Uber Eats. Now, one other little thing that happened was in Latin America, they are feeling the effects of Didi Quaching expanding, and so they haven't launched Uber Eats there yet. However, Dara said as the company expands its Eats platform in the Latin American region, it is positioned as the only company there that offers both rides and meal delivery. And I can't say enough how important that is. Like I said, one-dimensional companies won't be able to cut it. I mean, they'll survive. You know, they'll command, you know, X percentage of the rideshare market or whatever market they happen to be in. But when you think about the way Amazon has transformed the way you purchase things, I know me personally, I very rarely go to the store anymore. You know, I can have Whole Foods delivered, so groceries are taken care of. I can have almost anything on Amazon delivered to me either the same day or the next day. So why am I going to go elsewhere? Like, why am I going to go to eBay? Why am I going to go to all these different places when I can go to Amazon for everything? It's the Walmart mentality, right? So why am I going to go grocery shop at Publix and then go buy clothes, you know, at, you know, Ross or this place, just all these different places? You know, Walmart saw the need to put everything under one roof. Amazon did that in a digital way for retail, and now Uber is doing that in a digital way for transportation and mobility options. So stay tuned. You know, if you found value in this, great, awesome. Like, subscribe, share, any of that cool stuff, comment. If you don't like it, give it a thumbs down, make a comment. Happy to engage in dialogue with anybody. You won't be silenced. Thank you so much, and I hope you guys have a wonderful day.